What's good, everybody in the building, man? It's your boy Tony D2 Wild checking in once again, back in the building today, guys. And I had to drop something on this one, man. Dick's Sporting Goods to acquire Foot Locker for a $2.4 billion in effort to corner Nike market. Now, this was put out by CNBC and several other news outlets as well about this acquiring. My bad for my tongue twister. I'm always like that in the morning, but what's going on is Dick's Sporting Goods is seeming to want to monopolize the sneaker market, in my humble opinion. If you are in stocks at all, you will see that Nike's, for Foot Locker's, stock has jumped up $10 today with this news. Now, I think this news also is being reported late last night because you can see 18 hours ago. So it's being reported a little bit into the evening of the day in the after hours if you're in the stock. So some people may be able to hop on that. Some people may not have. But obviously, you can see that they were in a slump or around $13.24 going in the beginning of this week, about $13. You look back even more, they've been, very, very on decrease over the months. And if you take even deeper look, you could just see that from where they were once at in 2021 at $60 a share, all the way down to $12.60, $11.81. But now with this recent news and possibility of acquiring them, they've shot back up. So Dick's Sporting Goods, man, they're seeming to, in my opinion, start a monopoly in the sneaker market. So let's look a little bit in here. Dick's Sporting Goods said Thursday that it plans to acquire rival Foot Locker as it looks to expand its international presence, win over the new set of consumers, and corner the Nike sneaker market. Under the terms of the agreement, Dick's will use a combination of cash on hand and new debt to acquire Foot Locker for $2.4 billion. Foot Locker shareholders can receive $24 in cash, a roughly 66 premium of the Foot Locker's average price over the last 60 days, or 0.1168 shares of Dick's stock. No diddy. So I was looking at this as well. Now that may make some sense on why theirs drops $28. So I'm not the professional here in stock, but I have a portfolio myself. I'm wondering if that is why we're seeing this drop at that $20. If people are switching their stocks over, some people are cashing out. It seems like it's all over the place a little bit. But I can see, and even then they had to probably liquidate possibly some of those stocks to make up for that overall purchase. So some of the shareholders probably had to make some sales because of they had to come up with $2.4 billion. That's a possibility. Don't take that with a grain of salt, I would say. But also with their international presence, I think a lot of this has to do with the fact that, if you do know, JD Sports has entered into the U.S. market, a huge European footwear-based store. And Dick's Sporting Goods, for the most part, I think only operates, Dick's Sporting Goods, I think they only operate really in the U.S. Is Dick's Sporting Goods outside the U.S.? I'm looking this up. As of May 15, Dick's Sporting Goods primarily operates within the United States and does not have a physical store outside North America. So there you go. Them acquiring Foot Locker makes them instantly an international presence because they own Foot Lockers, and Foot Lockers are a global brand within, I think around, when I last checked, 2,400 stores. And I'm not 100% if that's worldwide. 2,400 stores across 20 countries. That's how many stores are in Foot Locker, where Dick's is currently at, I think, around 800 stores within the U.S. So they're going to be instantly becoming a international, worldwide presence. With that said, Foot Locker CEO Mary Dillon has been undertaking an ambitious turnaround at Foot Locker retail, and while there has been signs of improvement, larger market conditions like tariffs and consumer softness have weighed on the company's stock, making the company a potential takeover target. As of Wednesday close, Foot Locker shares were down 41%. In a joint press release, Dillon said the acquisition is a testament to all of the work her and her team have done to improve the business. By joining forces with Dick's, Foot Lockers will be even better positioned to expand sneaker culture, elevate omni-channel experience for our customers and brand partners, and enhance our position in the industry. The CEO added she was confident this transaction represents the best path for our shareholders and other stakeholders. While the companies are longtime rivals, both competing to sell the same brands in stores, Dick's is almost double the size of Foot Locker in terms of revenue. In the most recent fiscal year, Dick's reported $13.44 billion in revenue, while Foot Locker saw $7.99 billion. Dick's said it expects to operate Foot Lockers as a standalone business unit within its portfolio and maintain the company's brand, Foot Locker Kids, WSS Champs, and Atmos. So that was one of the big things I was questioning in my head, which I definitely thought. I didn't think Dick's was going to buy Foot Locker and then change every Foot Locker into Dick's. They were going to keep it how it is, and they plan to keep it how it is, especially alongside with Foot Locker Kids, WSS Champs, and Atmos. Now, very, very, very curious, and I have not looked into this. I'm going to literally type it up. I'm curious what that means for GOAT. Does Dick's Sporting Goods own GOAT? Technically, because doesn't Foot Locker own it? Does Foot Locker still own GOAT is a real question. I mean, it just makes sense. No, Foot Locker does not own GOAT. Foot Locker has made a strategic investment in the GOAT Group, the parent company of GOAT and Flight Club, but they do not own it outright. The investment was a significant move by Foot Locker to enter the secondary sneaker market. Okay, so they made an investment, but they do not own the company. So with that said, that investment, I wonder, though, does that transpire over to Dick's Sporting Goods? Because that's just something I'm curious about. Let's do a little quick research. Matter of fact, let's ask ChatGPT. Does Foot Locker own GOAT? It's going to say the same thing. Probably not. If Dick's then buys Foot Locker, what does that mean Dick's relationship with GOAT? No, Foot Locker does not own GOAT. In February 19th, Foot Locker made a $100 million strategic minority investment in the GOAT Group. Okay, if Dick's Sporting Goods completes its acquisition of Foot Locker, it would inherit Foot Locker's existing minority stake in GOAT Group. This stake originated from a $100 million strategic investment made in 2019, which included a seat on GOAT's Group board of directors. What this means, if they do it, indirect stake in GOAT Group, Dick's will gain an indirectly minority interest in GOAT Group, a prominent digital sneaker marketing marketplace operating platforms like GOAT, Flight Club, and Grailed. So while Group remains an independent entity, Dick's could explore opportunities to collaborate or integrate services leveraging GOAT's digital marketplace expertise alongside with his own retail operations. So I guess they'll have a little bit of something to say or do with them on that. So that's pretty something to think about as well. And what we know is like Dick's has been getting shoes, big shoes, like the big ones, like the big GRs. I think Military Blues, Air Force Ones, they've been getting stuff for quite some time. So it's not like they're like, in my opinion, going to be acquiring newer product. They have already entered into the marketplace and have had a very, very good variety of sneakers. I mean, they get pretty much everything that Foot Locker and them already get now, which makes them one a rival, as stated before. But I think that what they are missing maybe is Dick's Sporting Goods. When you think of Dick's Sporting Goods, when I think of Dick's Sporting Goods, and I know we're going to be saying Dick a lot, so get your mind out the gutter, no Diddy. But what we're going to be seeing here is a lot of shoes that are maybe more sport oriented, with a couple of these, like, streetwear, Jordan brand aesthetic looks. But look, you got tons of, what they call them, the Hokas or Under Armour, the cloud joints. I think they're trying to tap into the sneaker culture within itself and that streetwear and all that alongside with it. So by doing that, that's what they'll be adding on into everything. So I think it's pretty dope. I'm not mad at it at all. But with that said, we'll just have to wait and see what goes on there. So let's see. Dick says said that they made a conference call Thursday that the two businesses will be run as separate entities, and the consumer may or may not know that Dick's and Foot Locker are one. Except for we will, but yeah, I get it. The combination of them for the consumer is not the most important thing. It's making sure that there's two powerful brands that are meeting all consumer needs wherever, whenever, however they want to shop. The merger brings two iconic names in the sporting retailing and will give Dick's a massive competitive edge in the wholesale sneaker market, most importantly for Nike products. So it seems like Nike is what their main goal is. Currently, Nike's primary wholesale partners are Dick's, Foot Locker, and JD Sports. If the merger is approved, the combined company would be able to corner the Nike market at the time when the sneaker giant is more reliant on wholesalers than in its past. The acquisition would also allow Dick's to enter the international market for the first time. Foot Locker operates 2,400 retail stores in 20 countries and gives it access to the type of consumer who doesn't usually shop in its stores. The Dick's customer tends to be affluent, suburban, older, while Foot Locker is more urban, younger, and likely to be lower in middle income. Damn, says a lot. They saying we want them young people ain't got no damn, it says that says a lot. Okay, I mean, you can take it. That sounds negative. I get it. They want the younger class, but they also looking at certain demographics that they're not getting as well. To be honest, can I just be honest? Let's just say it tends to be affluent, suburban, and older white men. White dad, soccer moms, and they want to get with the darker skin colored people. That's how that was being said in a nice way. They're trying to tap into our pockets. Now, that's not to say, every person, there's all sorts of races in lower and middle class and urban, and you ain't got to, I'm not trying to say that, but it's obvious what they're trying to do here. While Hobart said that the company's not looking towards international expansion at this time, the total addressable market that Dick's is operating will grow from 140 billion to 300 billion due to Foot Locker's global reach. The proposed combination raises considerable anti-competition concerns, but Wall Street expects Donald Trump's FTC to be more favorable to mergers. Hobart said during the call that the companies are not expecting regulatory concerns with the FTC. Now, I don't know what this 100% means, but I'm wondering if it means for the fact that Dick's is a U.S. company, right? And now they're merging with Foot Locker. Now Dick's is becoming an international company where the international brand of the U.S. is being now put in other companies where we can get money from other companies now. And what I mean by that is Apple is a company that came out of America. Products are getting made in China, but I think now India. The jobs are being shipped over there. Money's being India's making money off of from an American company, and we're spending money over there. Whereas this is kind of the other way around, where we are an American company and we're putting our American brands in different countries, and we're getting that money from them over there as well. Now we are taking their money, and portions of that, obviously, the main operations is all going on here. One thing is the retail portion. Foot Locker and all that's retailers. Apple, we're talking about from the manufacturing standpoint. So I do see like there could be a better tariff and deal for it being a merger, and the fact that they're operating the brand in different countries and making money that could then potentially come back to the U.S. in a way. But hey, maybe you get what I'm saying, maybe you don't. I'm trying to make all word of this at the same time and understand this at the same time as we are all speaking on this. Foot Locker shares soared 80% after the deal was announced. Thursday, shares of Dick's fell roughly 15% as investors worried about the impact of the merger could have on financial results. Okay, so that's why it fell 15%. Basically, some people are feeling like the 15% drop is like some people are not believing in this. While Dick's expects the transaction to be accretive to earnings in the first full fiscal post-close and deliver between 100 million to 125 million cost synergies, Foot Locker has been struggling for some time. It has been cumbersome store footprint, many which are in malls and more exposed to economic downturns because of the lower income level of its customers. So yeah, I mean, from one thing is that like Foot Locker has to get up out of just the malls. That's the only issue, and I think that's also why Dick's is doing well, because Dick's is standalone. Now they have a couple in malls, but majority of the Dick's I've seen have been the majority of the Dick's that I've seen have been standalone. No Diddy. They've been their own building. Foot Locker, when I really think about it, right? And if you're from Atlanta, the only Foot Locker that I can think of off the top of my fucking head right now that was a standalone Foot Locker was is on off of Candler Road, across the street from South DeKalb Mall. And I don't even know if that's still there. Probably is. Let me just check. I think it is still there. It used to be across the street from South DeKalb, I think right off of South Harrison. But you get my point. Like, they're operating only in malls, and malls are, in our opinion, dying off. So they're going to have to figure something out there. Foot Locker has assessed all of its stores and determined that some locations could close, Hobart said, but she does not expect a significant number of stores to shutter. And a note on Thursday, TD Cowell called a deal a strategic mistake as the downgraded shares of Dick's to hold from buy. Analyst John Kernell Colonel said the deal is likely to produce low returns and presents clear risk to synergies, integration, and the structural foundation of Foot Locker business. Kernan expects the return on capital to be low and said it raises balance sheet risk. There's little to no precedence of M&A at scale creating value for the shareholders within softlines retail. In our view, there are countless examples of M&A destroying billions of dollars in value since we have covered the sector. So Dick's executive chair, Ed Stack, said the company knew there would be some initial skepticism in response to the merger, but stressed that the two companies are highly confident and up for the job. Both companies, I'm skipping some here, announced Foot Locker reported comparable sales down 2.6% from the prior year, led by slowdown internationally, and expects to see a net loss of $363 million for the period, compared with the net income of $8 million in a year ago. This loss includes $276 million in charges related primarily to trademark and goodwill impairments. Meanwhile, Dick said it saw comparable sales growth of 4.5% in earnings per share, 324. We are pleased at our strong start of the year and demonstrated sustained growth. So this sounds cool. It sounds nice on paper. It sounds nice like the time when the Lakers acquired Steve Nash and Dwight Howard. We had Steve Nash, Dwight Howard, Kobe, Metta World Peace, and then I think we had DeMarcus Cousins. I'm trying to think. I think we had DeMarcus Cousins. It was a starting five lineup that we had. Maybe it wasn't DeMarcus Cousins. I'm thinking way too long. Let me see. Steve Nash. I gotta show y'all this. Not even that. Like that, DeMarcus Cousins, I'm definitely off. It's the same lineup when we had Kobe, Gary Payton, Kobe, Karl Malone, Shaq, and I think we had Rick Fox or somebody at the small forward or something like that back in the day. Or one of them. It was like a stupid ass lineup, right? And it looked good on paper, but we got destroyed in the finals against the Pistons. So it's just like, it looks good on paper, but will it work? I don't know what Foot Locker can necessarily do to improve their sales. The sneaker market in general and the way that the sneaker world is, it's developing right now into a more heavily online based type of thing. Like I could see that just in the sneaker market in general. It's not just going for Foot Locker. Like people shop more and more online, and when you shop more and more online, what ends up happening is you're going to run into issues with your storefronts because that is a expense. You know, running an online store is extremely more cheaper than running a storefront. Okay, one person, two people can run an online store with thousands of people. Now you're gonna have to have a shipping and fulfillment center to accompany all that now. Whereas with this, you know, with the storefront, you can kind of just have 2, 3, 4 employees running that and shipping out of there. But I feel like with COVID, man, going through those years of COVID, it showed people, and then everybody just really doing stuff, whether, you know, not being out as much, it ruined a lot of the retail space, especially when everybody got used to being able to shop online. And there's a convenience that goes along with it. You know, you can go on Amazon and buy shoes now and have them shipped to your house and at your house within 2-3 days. Like the Amazon sells Air Force Ones. Now, for us sneakerheads out there with these specific drops and these limited releases, that's where you could still have people get up and go get something. But even then, you still have stores and people getting bots, and then even the resale market. People are willing to say, man, do I get up and go deal with the BS at Foot Locker, whether it's in line or at a raffle, for this sneaker for $200, or do I just pay $250 and have it delivered directly to my door, meaning the resale? You know, I call for money on resale just to, you know, not deal with the headache. It's a big thing. I think Dick's Sporting Goods, they need to make sure that they are looking at, and I'm pretty sure they are, but they're looking at, okay, how much % of our net income and all this is coming from sneakers themselves, you know? Because they obviously are selling tons of other things outside of just sneakers. So with that said, they're trying to tap in with this other market. That's what it seems like what they're really going after. So we'll just have to wait and see. I want to know you guys' thoughts and opinions down below, though, in the comment section, and we'll go from there. I'm out. I love y'all.